Let's get right into it, guys. First article today, mortgage payments increased 17% annually to $2,162. That's $2,162 in July. So what is happening? Because this is not in San Diego. That payment looks really nice.
Yeah, I'm like, where is this? No, but one of the things that did stand out right off the bat here is median earnings were up 3.7% compared to 1 year ago, but payments were up 17.2%. So realistically, 13.5 increase if you're adding, the increase of earnings. But where are you getting the 13.5% extra on your earnings to match the growth in payments?
Yeah, that makes it pretty tight, doesn't it? And my first thought when I read this was, okay, first of all, this is not in San Diego.
No.
Yeah, it is the median. But what's crazy about this is just this is I'd seen another chart unrelated to this article where the distance between it was basically an affordability chart. Where it was talking about the increase of median earnings compared to the increase of median home price over the last 20 years.
Yeah,
it's ridiculous. So this plays hand in hand with one of the other things we talked about recently, which about California affordability is only 16% of Californians can afford to qualify in California. Yeah. So I know this is a national median, but what's also interesting to me here is that the FHA loan applicants, that was $1,854 in July, but last year, a year ago, it was only $1,461. That's a 26% increase. So I did the quick math on this. So it's a $395 a month change for the higher, which is 26% increase.
And just so people hear that listen locally, I mean, these numbers will still basically play out here in San Diego. Likewise, maybe not as much, but the difference in payments are going to be more significant. But you can get an idea of the fluctuation in payments just around the United States. But here in our micro market, these numbers will mirror, but I feel they're going to be a lot more detrimental than the average national.
Yeah. Did anyone else notice though that with conventional loan applications, the average payment actually went down from June?
Yes, I saw that month over month went down.
I didn't.
Year over year, it is up.
Yes.
So that is helpful. That's a little bit representative of rates softening a little bit temporarily. So good point there by Lonesome Mike. Again, the benefit of loaning some money is he can say stuff like that. So, it was. Oh, go ahead.
No. Another thing I did notice that is just something that continues to come up is high rates plus high purchase prices for the houses, and it's basically like a 1-2 punch combo that is continuously just bringing down first-time home buyers, and the opportunities that present themselves if you're not moving quickly. Like on an offer we just got accepted today, the rates did move a little bit, and now it's going to be a little bit different. So that's how quickly things are moving. If you don't have the right things in place, your payment can switch from one day to another. Yeah,
and this is coming from the Mortgage Bankers Association. So this is certainly from I guess I'd say the tip of the sword when it comes from data and where we're getting it. This is unlike some of the other data which can be refined later or adjusted after the fact, such as unemployment and things like that. I'm not going to get down that rabbit hole, but this is the Mortgage Bankers Association. This is from the front lines of what's happening in mortgage. And I want to quote Edward Sealer here, who's an economist for the MBA. He said, prospective homebuyers continue to face challenging conditions in July, with elevated and volatile mortgage rates and low housing inventory serving as a formidable 1-2 punch that suppressed mortgage applications and sales activity. And that went on to say, affordability will remain a hurdle for many households looking to buy a home, because here are the top 5 states. The top 5 states with the what they call the highest purchase application payment index.
Poppy.
The Poppy are Idaho, Nevada, Arizona, California, ding, 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 and Florida. So we're not out of the woods on this yet, guys. Although I would say $2,162 a month sounds great.
Oh, that would be great here in California.
No, but if you notice, these Idaho, Nevada, Arizona, and California all had growth in the last couple of years. So they're still very, very hot metropolitan areas that people want to move to, or desirable areas. And that's one of the reasons I feel they continue to hold their price and the range of where the market is at, because of the fact of the people that still continue to want to buy houses in these certain areas. So I don't think that's changing anytime soon.
Yeah, it's funny you bring that up, Brian, because one of the things I always talk about with my parents is eventually down the line, I would like to move out of California, but then I was really thinking about it because one of my best friends moved to Florida, right?
Yeah.
And so I'm kind of thinking about the pros and the cons of California versus Florida. And then I get to thinking, well, I mean, nowhere beats San Diego, nowhere beats California. As much as, maybe people don't like it here and a lot of people are moving, when you really think about it, you just can't beat San Diego.
And you know what? And I agree with that 100%, which makes the argument for people to, make those sacrifices to want to stay here in San Diego, find multiple ways to find other sources of income, house hack if you're a young millennial or a Gen Z, there's so many different ways that you could set yourself up to still stay here in San Diego. Although it's expensive, yeah, we know. But if you have the right plan in place, I feel that, there's people doing it and are continuing to do it, and people are going to continue to want to move here to San Diego.
And I'm going to reference something that Will said on a previous show too. We were talking about, when he first bought a house and looked at the payment, he was like, also, oh gosh, how are we going to make this happen? And then made short-term concessions. But then over the course of time, as the payment became more normalized for him and his family, and then he ended up making more money over the course of time. Again, for most people, the trajectory is we're going to make more money over time, not the same or less. And so in that same instance, it may seem a little bit more disproportionate as a part of your income when you first start, but over the 3, 5, 7, 10 year mark, it starts to become less and less as you gain in your career, add additional income, or just make more money. So that is something to consider as well.
And one way a good way to look at it is, make short-term corrections in your short-term goals that still keep you a course to your long-term goals. So, the long-term goals stay the same, but maybe the immediate things that you got to do are going to switch up a little bit, but there's always a way.
Yeah.